Good morning, everyone. We'll just give everyone a few minutes just to come in and settle in. I am just going to launch the first poll very quickly. So as you come in, if you could answer the poll for me, that'd be great. The question is, do you feel confident in placing bridging business? Just give it a few more seconds. I think we've got a few people in now. It looks like it's a very 50-50 split on this poll. Perfect. Right. Thank you very much for answering the question, everybody. The question was, do you feel confident in placing bridging business? So we have 50%, 62% say yes, and we have 38% say no. So there's definitely a few people that we can change into a yes this morning. Right, so hello everybody. Thank you so much for taking the time today to join us on this webinar. I can literally only imagine how busy everyone must be with everything that's going on in the mortgage market at the moment. But my name is Laura Smith. I am the Sales and Marketing Manager for Knowledge Bank, and today I am joined by Roma Finance. So Roma Finance offers a lending less ordinary with progressive range of lending solutions designed to support intermediaries and borrowers on standard complex bridging, development and buy-to-let applications. So a big warm welcome to Steve Smith, who is the Sales Director for Roma Finance. Morning, Steve. How are we doing today?
Morning, Laura. I'm very well, thank you. Very well indeed.
Good, good. So Steve is going to be discussing commercial bridging and conversions this morning. We will then move on to a live question and answer. So if you do have any questions, please use the question and answer box and the chat function at the bottom of your screen. We will answer as many questions as we can today. Any that we don't do, we will be passed on to Roma Finance so they can follow up with you directly after the session. The session this morning will last between 45 minutes and an hour, and you will receive your confirmation email from Knowledge Bank for your CPD over the next few days. So once again, if you do have any questions for Steve, please use the question and answer box and the chat box as well. So without further ado, I'm going to hand over to you now, Steve, and you can start your presentation.
Okay, great. Let me just share the screen. Hopefully this will work. This is always the worst part for me.
Fingers crossed.
Absolutely.
We're in. I can see
We're in. Fantastic. Lovely. Thank you. Thank you, Laura. I'll speak to you shortly on the questions. So thank you for everybody for joining us today. I'll run through very quickly an overview of what we do in our commercial market, so the commercial bridging and conversions. I'll try not to bore you too much with lots and lots of screenshots. There'll be about 10 slides. I'll talk through them as we go, and then let's have some questions and answers and make it a little bit interactive. There are quite a number of you not confident with placing bridging, so let's sort of talk about that at the end. Hopefully I can get you a little bit more confident as we go through and talk about what's going on. I know the market's difficult right now, but I think it's all about choosing the right lender and the brokers asking the right questions of those clients. So without further ado, let's crack on through. So what do we do at Roma? We look at understanding the borrower first and foremost. So it's not so much about what the property is, so whether it's commercial, semi-commercial, any kind of commercial as well. It's what's the customer's motivation, why have they got that property, why do they want that property, what's their background and experience, are their costs and timescales realistic? Really important one. We've seen, probably not so bad now, but certainly we've seen via COVID, via Brexit, via Ukraine, timescales have gone up. We used to have our typical average bridge was 9 months, start to finish. It's gone out to 12 months now, and I think in the marketplace it's actually 15 months. So you can see that there are some timescale issues. Costs again did go up, especially during COVID. Those costs for materials are actually seeming to plateau out at the moment, so they don't seem to be such an issue, but timescales can still be a problem. And obviously for any bridging and development lender, what's their exit? Hugely important for us. Let's plan on that exit, and is it viable? Are they planning to exit via sale? In which case, do they have a few months to do that? Have they got a closed bridge? Is it a closed sale straight away? Or is it a refinance? And as we know, in this current climate, refinances are not as easy to get as they were, certainly not fixed, certainly not sort of term loans and mortgages. So it's really important that they plan their exit and have a couple of options now, as the market we're going into is a little bit of a bumpy one. So according to the BBC, we're basically looking at 8,700 high street stores closed in the first 6 months of 2021. Vast majority of that were commercial, some were semi-commercial, which just means there's a lot of property out there for property developers to come along and convert. And it may be in the current climate that they can get those properties at a knockdown price. And that's really important as well, the below market value offerings, because where there are difficulties, as we know, there are opportunities for actual proper property developers who do this as their job and career. We love to lend. We have access to 9 funding lines, and I think that's really important as well in this world that we're just about to go into or have gone into. Let's be honest, we have got 9 funding lines, and those funding lines are all British. They are all banks and building societies of Great Britain. They are not foreign investors. They are not sort of pension schemes or anything like that. They are proper full-on banks and building societies of Great Britain, as well as our own funding lines, because we've been now going 15 years. So we have 1, and we've got 9 extra funding lines that are traditional British, and we have millions and millions to give out. Hence we love to lend, and hence my directors love me to lend, because we have so much money to actually give out, including on commercial, which is what we're going to talk about today. So our conversion products, we have standard bridging, we have semi-commercial and commercial. We also have developments as well. And we also have commercial developments, which may be of interest. We also work in England, Wales and Scotland. So we do commercial in Scotland, we do developments in Scotland, and we do commercial developments in Scotland. I think with all these things, it's quite good to have a couple of case studies to see what we've actually done. I know it's quite difficult on these to see the pictures, but if you look at a standard bridge on this one, it was an old daycare centre, which from the outside was pretty smart on the left-hand side of the top. Obviously, internally, it was just a mess and nothing had been done. We obviously looked at sort of changing that into properties, and you can see they tarted up the front part of it and the outside space, which looked nice, but internally they did a really good spec on this. They were experienced developers. This was the 4th project that they'd taken with ourselves, so we know them very well. And actually their exit was intended to be a buy-to-let product. This was before we had our current promises, it was about 6 months ago, but they actually got such a good sale price that they actually sold the properties themselves. So they completed and sold the properties to another developer who's actually a rental market himself. So they did very well. It was an old daycare centre into 4 residential dwellings. So you can see the kind of things we do all kinds of sort of properties. The property itself doesn't really matter, however bad it is at the start. If we're lending them money, hopefully it means that value will go up. Otherwise they're not doing it right. Second case study for you, you're looking at it a little bit more. It was a closed, there were 2 properties together, joint properties, both commercial, both closed. As you can see from the top, internally it was an absolute mess. It was empty for about 4 years. It was very unloved. There was some water damage. There was also some leaks. And you can see they actually ripped off everything from the outside, created a whole new frontal aspect. And then inside, they did it to a much lower spec. It was a good spec, but a much lower spec than the first one we said. But they've just gone, basically, it was their first property development, but they were 2 directors, a builder and a plumber. So they'd done lots of work for other people, and it's their first actual deal themselves. And they got it at a bit of a steal. They got it for 187k. Build costs were huge because I had a lot to do. So 332 grand's worth of build costs. And the GDV they anticipated would be 990, which it actually hit spot on. So we gave them a gross facility, gave them 111 plus all the full works in arrears as they went through. They converted them into 3 terraced houses, and they basically, literally had a rental income on completion of 52k per annum, and they're still with us today renting those properties out. They've actually done a second property now of another 3 terraced houses. So they seem to like the theme of getting commercial properties that are empty, a bit of a state, so it takes a lot of build costs, so you have to phase that in. but they obviously turn them into really good quality terraced houses and rent them out. And that's their ongoing theme. And they intend to do 5 this year. They're currently on their 3rd. So they're doing quite well on that basis. But it's just to show you really on these case studies how different we look at properties. And I know a lot of our competitors will look at the property and take that as how we look at the borrower a lot more. And in this case, although it was their first time doing a development, they were a builder and a plumber, so they'd done it for other people so many times before, so obviously we were fine with that. If I give you an idea of our bridging criteria, it obviously changes at the moment quite a lot. We are flexible in our bridging criteria. We can change things like arrangement fees. We can change things like exit fees. We can look at rates and change them as we need to. As I said, we lend in England, Wales and Scotland. We do solutions for residential, HMO, semi-commercial, fully commercial. We also have an auction solution where we use an AVM. And we have 100% funding options with additional security. We also have a developer exit product, which is actually very popular at the moment. We're seeing that move on in the market, whether that's because people are running out of time with other lenders, and we're quite happy to sit in and actually make sure they finish that, because there's no point leaving a property that's wind and watertight, but they need all the works inside. What's the point in leaving that? You know, we can come along and give them, exit their current provider and give them that little bit more money to actually finish off, and then look at either the rental market or sale. We're seeing a lot of that, and I think we probably will see a lot of that developer exit model coming through the next sort of 6 months as we go into this financial turmoil we have at the moment. To make things easy, we title insure our legal process, meaning it's a quick turnaround time. With all of these, we have two ways of doing things in Roma. We have a Roma Flow, so for all your bullet loans, your single vanilla bridges, they go through a much slimmer, lean situation where they just go through underwriting very quickly with title insurance, with using things like sort of Credas as an app rather than sending passports, and we use banking apps so they don't have to send through bank statements. With this kind of property, with commercial developments and with refurbishment works, we obviously look at a structured process where you get your own underwriter, and that is a named underwriter for the case. You've also got your own BDM, depending on the area where you are. I have them all around the country. So you have your name BDM with mobile and email. You then get switched over to an underwriter, a named underwriter with their mobile and their email address. So at any one point, you can know exactly what's going on with the deals. We're trying to make it as transparent as possible. We're trying to make it so that these processes go as quick as they can. We've seen valuations slow down during sort of August, but they pick back up again. And we personally use any value that's on a VAS panel, a method panel. So all kinds of panels and all kinds of major valuers are absolutely fine with us. So looking at the rates at the moment, that's where we are. So it's a standard bridge with up to 20% worth of work. So a really quick, probably bathroom or kitchen, we can do 75% loan to value. If it's a light refurb, we class a light refurb as between 20% and 50% of the value. So keep it really simple. If it's a £200,000 house and they have £100,000 worth of works to do, it's 50%, it's a light refurb, and we'll do 70% of that. If it was a £200,000 house and it's £200,000 of works, it's classed as a medium refurb, because that's between 50% and 100% of the current market value. We do up to 70% of that. It only becomes 65% if the cost of works is more than the actual value of the property. So like that one that we saw earlier, if you buy something at 200 but needs £400,000 of works because they're absolutely smashing it apart and starting again, in essence, it's a heavy refurb model. Now, of those standard bridge, light refurb, medium refurb, heavy refurb, there are no exit fees at all. On the commercial properties and semi-commercial properties, there are no exit fees at all. And on the developer exit, there are no exit fees at all. We only charge exit fees when there is a ground-up development. So if it's a ground-up commercial development or a ground-up development from scratch, from the land, we will charge a month's exit fee on top of the rates. So that, but on all these things, if you have current deals, speak to myself, speak to one of the team. As I say, I've got BDMs all over the country. So depending on where you are, you will have a relationship with one of the BDMs, geographically speaking, from where your brokerage is. And we can talk about, we can get you a quote within a couple of minutes, so we can get you an AIP within the hour. So it's a slick process as we can do in this current climate. Rates are from that. They are the current rates today. Obviously, if interest rates go up a lot, they will change again, and that's where everybody is. They're not fixed rates, they are variable rates, but they are fixed for the time of that bridge. So at the moment, if you come in with a standard bridge, it'll be 0.69% for 6 months, 12 months, whatever it is. Obviously, if we have big changes again in the base rate and it goes up another 2% next week, it will change, but we will do that from there so you can see it. We're really open about this. We're really upfront about this. We've all got to be very adult about it. We've seen the mortgage market, and the bridging market is exactly the same. Anybody who says they're doing rates at sort of 0.4 at the moment, unless they've got their own money, they couldn't possibly make any money on it. And then looking down, what we require for your sort of standard requirements, you get an agreement in principle that's signed by the client. The application form is completed by yourselves and signed by the client, or completed by the client. And then we need the following: so a cost of works, a schedule of works, and a change of use consent if that's needed, if it's a sort of heavy refurb or they're doing a development. And that's pretty much it. I think, you know, let's move on to some questions. Let's move on to try and allay some of your fears in the current climate. Questions are all absolutely always welcome, and let's have a chat about where you are. And I think in these current climates, it's better to have that open communication with the funders as a broker and funder to find out if we can do these deals and do them quickly. Hi, Laura, you've popped back. I can see.
I'm back.
Look at that.
Hello. I've heard my cue. I'm back on.
Perfect. Well done.
Right. Thank you very much for that, Steve. Do you mind stop sharing your screen for a minute?
No problem at all.
Perfect. Thank you very much.
No worries.
Right. So, right, well, let's move on to some questions then. So, we have had a few through from the registration form, so we can go through a few of those. But if anyone does have any questions, please feel free to use the question and answer box at the bottom. So let's start. We had a question through on a registration form from Craig. He asked, do you lend to non-UK nationals for a UK property purchase?
Yes, we do. As a standard rule, absolutely yes. There are some stipulations in there. So if they've not got any properties in the UK currently, and they've not a credit footprint or anything, we would want them to come along to the UK to sign the paperwork with a UK-based solicitor. We'd want that. If they already have, you know, a credit footprint, or they have a couple of properties already, and they use a current solicitor in the UK, and that solicitor is happy to actually verify them as the KYC, absolutely no problem for them coming to the country. Perfect.
All right. Thank you very much. Quickly, actually, we had another poll, didn't we? So let's put on the second poll. Right. Whilst you guys are thinking of your questions, you know, we want to make sure that you guys get as much out of this as possible. So please do use that question and answer box. I'm just going to launch a poll really quick, which is, what have you experienced as being the most common use of bridging in the recent months? So if you could answer the question, that would be great. Perfect. Thank you very much. Just give it another few seconds. Perfect. Thank you. Thank you, everybody, for that one. So, so the results for this poll, Steve, we've got what have you experienced as being the most common use of bridging in the recent months? We have 17% says conversions, 44% says refurbishment, 33% says standard bridging, and 6% say rebridging, sorry.
I'd say that's probably about what I would see. I'd say refurbishment is certainly the biggest thing that we see currently. And I think there's a lot of standard bridges that are just basically auction purchases. And then there's a lot of conversions that go on top of that. We're not seeing the rebridge at the moment, but I think that probably will come in the coming months.
Perfect. Okay, so we've got a couple of questions that have come through. So Dion has asked, he said, I have a client who is looking for a purchase to purchase a house to develop out into flats. They have experience of building their own residential property of 2.5 million in value.
Yep. Great. That's something we would look at all day long. Yeah, absolutely. Not a problem at all. Basically, it's just on the regulation piece, make sure that it's not regulated, that they haven't lived there, they're not doing it in their own names. But apart from that, as we're an unregulated lender, if it's in a limited company and they haven't lived there, absolutely perfect for us to redevelop and do into flats. Not a problem at all.
Perfect. So Dion, all the question and answers will be sent over to Steve after as well, so they can follow up with you directly and help you place that case.
Perfect.
Thank you very much. Right, Dinesh has said, I have some complex cases, need development finance from 18 million to 250 million. I am in Southeast London and my office is E14. Can I have a customized discussion with a BDM or senior management about this?
I would love to, but no, just because those amounts are far too big for us. We sort of top out at about 3 million per lend. So with those kind of amounts of money, that's not something for us, I'm afraid. We sort of look at anything from £50,000 up to 3 million.
Perfect. Thank you very much. Right, how fast can the bridging funds be released from, and what is the average timeline?
Okay, again, there's so many variations to this. You can release funds in 24 hours if you have everything ready. So we've done sort of rebridges for another person where we've retyped the valuation, the legals are all done, and you can do it in 2 days. Anybody can tell you that. Any funder will no doubt put that on their website that I can do that. At the moment, the average time for a flow deal, which is your basic bullet loan single purchase, is around about 28 days. And then if it's a structured deal, which is therefore what we're talking about here, a commercial that's probably got some refurb, it's around about 36 days currently as we sit. It was slightly longer because of valuers and legals, but that's actually calmed down a little bit. I think because summer's over and people are back to work again. And actually some of the solicitors are not working from home as much as they used to. That's helping. So it's actually come down a little bit in the last few weeks, but you've got to allow really up to 4 weeks. Unless you've got everything, we can do it in a matter of days, obviously. But if you're starting from scratch, need evaluation and need the legals to be done, allow sort of 4 weeks and you're comfortable in that position.
Perfect. Thank you very much. And he has also asked, what would be some example of reasons why an application would be rejected?
There could be all kinds of, the valuation may come in low or completely different, or there's structural problems. We would then obviously either offer a lower amount that they may not be able to work with. It could be their credit file is awful, in which case we don't mind the odd default, we don't mind the odd CCJ, but obviously if they haven't paid their mortgage for 6 months, we're not going to look at that. So there can be, a number of reasons. What we like to do is actually talk through those reasons, and as long as there's a way around it and a sensible way around it, that's absolutely fine. And that's why you have an underwriter you can talk to and a BDM you can talk to, rather than sort of a call center or a sort of a computer screen.
Yeah, right, exactly that. Perfect. Right. Dion has said, if a client doesn't have the experience, but they have a project manager, so an architect with an intensive experience, and a builder who has extensive experience, would this scenario be acceptable?
Yes, it would. Absolutely. We saw with that one that one of the examples I put on, it was their first actual development themselves, their first refurb, but they were a builder and plumber who'd done deals themselves for other people. But on paper, it was their very first deal. They didn't have any kind of history of doing it themselves before.
Right, perfect. All right. Thank you very much. Right, let's flip back to the registration form. So keep your questions coming. And we had somebody ask, actually, where are we? So Ying has asked, how many years of tax assessments do you need for self-employed clients?
We don't. So for self-employed, we don't look at it like that. In that's in sort of the mortgage world, you would look at that. For us doing a development or commercial bridge or sort of refurb, we look at the exit. We look at what they need, to do that works, and if that's feasible within the loan to GDV or loan to value. But we don't look at any kind of, unless they're going to service the debt, we don't look at what they earn at all.
Okay, perfect. Right, next question. What is the limit of lending level on a portfolio?
Okay, so we don't have interestingly, we don't have a limit on the actual portfolio size, but we can only do up to £3 million per transaction. Now, obviously, we are a relatively small lender with a £100 million book, so we wouldn't look at anything more than 20 million as a portfolio, but certainly up to that level. It's more about the individual size of the transaction. Hence, I said earlier on to the guy that came in, it's like I would love to do £25 million transactions, but that's not our bag, I'm afraid.
Fair enough. Okie dokie. Right. Does anybody else have any more questions? This is your time. We really want you to get as much out of this as possible. So please do use that question and answer box at the bottom of the screen. We've got another one here in the meantime. And we have, Paul has asked, do you consider on lending on long-term holiday let portfolios?
We have a 5-year holiday let term product that we can do. So if we can do a bridge to convert it into a holiday let from whatever it is, if they need to do that, and then we can flip it over internally onto a sort of 5-year buy-to-let just for a holiday let product. The only thing you have to watch with that holiday let product is it has to have the ability to be a normal buy-to-let as well. It can't just be like sort of a log cabin for a holiday let. It can't be a caravan. It has to be sort of a property that can actually go to a buy-to-let, again, standard buy-to-let if it needs to be. So a flat, a house, an apartment, etc.
Perfect. Right, David has asked, what valuation measure do you lend against?
So on the valuations, we use sort of basically any kind of valuation. We can do AVMs on certain properties if you're just going to look into purchase to buy. We can look at sort of doing a full red brick valuation. And again, all we ask from the valuation point of view is that if there's going to be development, we want a development end to that. So we don't necessarily need a QS. It depends on the value. We only use a QS when it's £750,000 or more. So up to that, we'll use an actual valuer, but it is a red brick valuation in basic terms.
Perfect. Dion has asked, what is the longest time frame for a development bridge that you would go to?
2 years, so 24 months. So we do any kind of bridge or development from 3 months to 24 months, anywhere in between.
Perfect. Thank you very much. If we refer a client, then they continue to work with you on another project, do we still receive remuneration? I've had cases where clients try to outsmart the system to avoid fees.
Yeah, so if you did a deal through ourselves, first deal from, I don't know, a brokerage that comes through, that brokerage is linked to that customer, so on our database. So if that customer does come back through, and sometimes they do, you see it, they think they're going to get a cheaper rate or a better rate by doing that. We then go back to the broker and say, okay, they're talking to our customer services team, or they've come back through to the sales team, but this was your original client. Are you still in touch with them? Very occasionally, there are times when they've gone to a different broker, or they've split up with that broker for whatever reason, but we'll still go back to that broker. If generally we just pay the fees to that broker because we get them involved. You still need to work for it. We'll still get you involved with it, but we're not going to run along and just do a deal without you, because we're a broker-led business. Over 75% of our business is from the broker market. So, trust me, with my sales targets, I need to keep you happy.
And Monica's asked, what is your product fee?
So we don't have a product fee as such. We have an arrangement fee, which is basically your commission. So if it's a 2% arrangement fee, it's 2% commission, etc. So we don't have a specific product fee. That's generally for mortgages, I think, to be fair.
Yeah, right, perfect. And will you still, I know you've already covered this, but because it is such a hot topic at the minute, especially with everything going on in the week, I just wanted you to kind of reiterate again, you are still able to lend in the current market. So what does this mean for you going forward? Yeah,
so it's a turbulent market. There's no getting away from that. But we, as I said through the webinar, we have 9 other funding lines besides our own money. So, and those funding lines are big banks that are in the UK or building sites that are in the UK. So we've got a lot of money to spend and to give out and to actually go through the process. That doesn't change. That hasn't changed. That nobody has pulled those lines from us at all, and we have good working relationships and have done for 10 years plus with some of them. So they're not going to. They make money from us making money. So it's a process. That's an arrangement. However, there's no getting away from the fact that we've had huge hikes in the base rate quickly, and it looks like we're going to get more fairly reasonably soon. So we have to look at that and we have to price accordingly. All I would say is that we'll change our pricing as base rates go up. It doesn't make a huge amount of difference. For every sort of 1% base rate increase, it's sort of 0.1 on sort of a bridge. So whereas it's 0.7 now, perhaps if they put it up another 2%, it might be 0.75. You know, because it's a monthly fee, not an annual fee, it's slightly different. But we have got money, we are lending, we're lending on all aspects, commercial, semi-commercial and residential. There is no issue. We're not looking at all at changing our products. If anything, we're looking at, we've launched a below market valuation product because the market probably will go into that, where there's some options for people to buy at a lower market value because people will be in trouble. So we're looking at those kind of things. So we're not looking to pull our lines. It's just be careful about the rate. There's no getting away from it. Rates will slightly go up as the base rate goes up. I'd love to be able to say I'll hold my rates forever, but everybody needs to make a profit on these things.
Right, exactly that. Right, I'm just going to pop the third poll on the screen. We've got a couple more questions that's come through as well, so we'll get to those in 1 minute. Right, so this question is, do you feel property investors and developers are being more reserved in the current climate? So if everyone could just take 1 minute and we can answer this poll. Perfect. Thank you very much, everyone. So, Steve, what's your opinion on this question?
I think if you're a property investor and you're doing that as your career, that's your job, that's your role, you will continue to do it because there are going to be some opportunities in the current climate. I think if it's your pension plan, because it's a one-off that you've thought about doing for a while, I think you'll be more reserved because of the current climate. So I think we deal with both aspects of the marketplace. I think if you're a property developer, there are opportunities. They've probably been through this before. It is cyclical in how we do things in our economy in Britain. We don't seem to learn from it, sadly, but and so I've seen it myself. I'm not as young as I look, Laura, so I've seen lots of these recessions before, and I look at it and I go, so if you're a property developer, you're going to roll with it. You're still going to do it. You're still going to look at probably try and get things cheaper, especially in the commercial market. I think, honestly, if it's you've been thinking about it for a while, you've got a current job and it's just part of you want to do it on the side, so to speak, I think that's more difficult. I think people will be more reserved about that. So I think for your and maybe for your very large deals, which we don't really deal in anyway, but I think for your very large deals, your 25 million plus, they might be a little bit sketchy at the moment because of the marketplace. I think when you're dealing with a £400,000, detached property or a £240 semi-detached property, it's not really going to have that much of an effect. Obviously the mortgages are higher because of the base rate, and prices might be slightly tweaked upwards. But in general, if it's a good property that you can make money on, you're going to charge more rent anyway because of the current climate. So I don't think it affects the real serious players, but I think for the people new to the market, it might be a little bit of a barrier. And I think we've just got to all, remember that, and probably as a broker, talk to their clients a little bit more, and as a funder, talk to the broker a little bit more about how we can handhold a little bit and see, look, I know it's bumpy out there, but actually there might be some opportunities as well.
Yeah, no, perfect. Well, the results of the poll were 92% said yes and 8% said no.
Yeah, it's not massively surprising at all. I think with what's going on at the moment, people are necessarily conservative, but if it's their job, they don't really have a choice. That is what they do, and they've been through this before, and they will continue to do and look at opportunities in the marketplace.
Yeah, no, exactly that. Right, so Stinda has asked, will you lend to part complete development? If so, what is your GDV?
Yes, so we look at this. It's probably part of the developer exit. I mean, the true developer exit is when property is wind and watertight, but we're quite happy to look and take over. Either, I mean, if they've done, it could be that they've run out of money themselves, or it could be that we're paying off another lender. But certainly, we look at it, and we look at it 65% against the GDV. So you work backwards from that. So whatever the GDV will end up being, we work 65% back from that, and that depends. If it's part built, we can give them money day one to pay off their current lender if they have one, or we can give them a chunk of money to start the works or start continuing the works, and then give them the rest in arrears as they complete it. So in answer simply, yes, we do, and we do a lot of that, and I think we'll probably see that market open up a lot more as other funders maybe close down or get a little bit more conservative as funding lines might retreat.
Perfect, thank you very much. And thank you to Michael for your comment. He said that he missed the start, so looking forward to the replay. The whole recording will be sent to Roma Finance, so definitely get in touch with them to access it. I'm sure they'll be putting it on their kind of websites or social medias at some point really soon for you guys all to watch as well. So
I'm sure my marketing team will be straight on that, Laura, to be fair.
I'm sure they will. Yeah. Right. So do you have any advice for a broker placing their first bridging case?
I think it's pretty much know your customer. I would say that's know what the borrower wants to do, know and be able to answer the questions without going back to the borrower. So do your own fact find. I was a broker for 7 years. That's what I did. You go out and see a borrower or speak to a borrower or do a Zoom call with a borrower these days. It's probably more the norm. And you actually find out what their intention is, what they want to do. Are they doing this as a career move? Are they doing this as a one-off? Do they have their exit in place? And just find out what the property is. So we will only need, so my BDM to get you a quote will need the address of the property, the client's name if they're doing it in personal or the limited company name, how long they want it for, and the amount of money they're looking for. So we can work off our LTVs and LTGDVs. So it's quite simple to get a quote. It's quite simple to get an AIP. When it comes in, if it is just a refurb product, all we then need is that completed application form, an AIP signed, and the schedule of works in essence. As long as we know it can be done, if there's planning in place, we've got planning, or if it can be done without planning, just have that kind of question to the borrower so we can answer that. And just be wary of the regulation piece. You know, it's basically we're an unregulated lender. If it's in a limited company, fine. If it's in sole names and they've lived in that property, that is regulated. So, you know, you have to just look at that piece. There are plenty of regulated lenders out there that can work and help you. We're just not one of them. So for us, the regulated bit is important, obviously. And then really what the borrower wants to do in the exit. The exit is still probably the most important factor for any of our bridges or developments.
Perfect. Thank you very much. Right. If anyone has any more questions, please use the question and answer box or the chat function as well. So how are brokers placing business with you and how do they get registered?
Okay, so registration is really simple. They can do it online on our website, or they can just basically inquire at inquiries. As you can see, inquiries at romafinance.co.uk is the simple one. My email address is steve.smith@romafinance.co.uk. So again, I can put you in touch with your local BDM. We have one in each area of the country. So we're all over. We can send you basically, you can either do it online or do a very simple application, which is it will take you 5 minutes tops, and send that through, and we will just register you on our database. So and obviously introduce you to our team. You'll receive an email with all how we work, how we operate. But in essence, we don't have a portal. We are very much sort of face to face. We want you to talk to us. We don't want you to do it facelessly. We want you to sort of contact. But to get a quote from us once you're registered, simply email or call your BDM. And they will literally go through, you know, the simple questions and answers about the deal. We'll get you an agreement in principle within the hour, and then really it's up to you to then, you know, talk to the borrower and see if that's the best option for them, and we are the best option in the marketplace for your client. I would say as a broker, you should always go to 3 or 4 lenders and just see. And I think it's important to compare like for like. Every lender sort of does things differently. So, you know, have a look at, it might just be all about the rates. The rate could be cheaper with another lender, but they have an exit fee on there that we don't, or, you know, you get less commission or you get more commission. You know, all these things are important. So if it's your first time, know the market, know your borrower, and go to some reputable funders, to be honest, because it is an unregulated marketplace. There are a lot of bridging funders out there. There are not a lot of bridging funders with 10 funding lines that have been around for 12 years. So it's important to know who you're dealing with and to have trust and faith that we will actually do that deal for you and actually be honest with you and get the money. Because at the end of the day, we all earn money on a completed case. There's no point getting it through to underwriting and then it being thrown out for whatever reason. You know, we will talk to you about if there is a problem with the deal, how we can get around that, or if there is a serious problem with the deal, we will tell you straight away as soon as we can. But we are looking at 70% of our inquiries that come into an AIP then go into an application form, and 70% are completed. So we've got a 30% drop off, and in the main that is credit related. So there are some with valuations where we talk about valuations, but that doesn't mean we're going to decline it from our point of view. It could just make it unfathomable, unworkable for the borrower, in which case they'll walk away. But that, especially in the commercial market, that's difficult. You know, there are some valuations that have come down in price in the marketplace, but if you're making a commercial to residential, that the GDVs are staying quite high because there's still not enough houses or flats in a country of our size with the population we've got. So, you know, the demand is there. But if you're doing a commercial to commercial, which we do, it's more difficult to get that GDV as people think it will be. We're seeing a few sort of declines on that. So it's important to sort of just be really, really honest and upfront and communicate honestly and openly with us, and we'll do the same with you. It's about a relationship, and we want a relationship with you guys, and you want a relationship with that borrower, so we can do the second, third, fourth deal with them and both earn money from it.
Yeah, exactly that. And also we do have all of your criteria on Knowledge Bank as well. So if you don't have a Knowledge Bank license yet, you can get a 30-day free trial. So I'll just put the link in there, and Roma Finance's criteria is completely up to date on there as well. So we've got a couple more questions in, actually.
Okay.
We have one from Michael. He has also said, just a note, he said rate is important, however service and capability is way more important, which I'm sure you agree as well.
I certainly do, Michael. I absolutely do. As long as it's in the ballpark. I understand where people come from with rate as well.
Yeah, no, exactly that. So Michael has also said, who, what, and how much are solicitor costs? This area has always been the worst feature of this type of finance, plus unpleasant cost surprises.
Well, we've got basically we use any solicitor that is qualified that has more than 2 partners. So a borrower can use any solicitor at all in the country, in England, Scotland, and Wales, that has 2 or more partners. So we don't worry about that. We use 8 different solicitors ourselves from our point of view, and they're all the ones you would associate that do all of the bridging and developments for all of our competitors as well. They know the industry, they know what they're doing, and basically it's a flat fee of £1,200 for the solicitor costs, up to 350,000, and then it goes up in increments after that. So there's no real, you know, hidden cost. It's there on your AIP. When you get an AIP from us, it tells you the valuation cost and it tells you the legal cost. That won't change. I think with legals, it's very difficult because things can get lost in legals on both sides. Now, with our legals, we have a whole completions team that chase our own solicitors, and they can also chase the customer's solicitors for the information. And I think that's just really important to have that ability to do it, because otherwise it can be lost between one solicitor saying it's the other solicitor's fault for weeks, and there's no point to that. So we have a completions team that chase through the legals, so it's really important. And as for pricing, that's said on the AIP up front, so there should be no difference from that at all.
Perfect, thank you very much. So David has asked, if an applicant has lived in a property at some time but never owned it, i.e. an old family home, would this be considered as a regulated deal?
If they were buying it in their own name, it would be. If they were buying it in a limited company, it wouldn't.
Right, so if anyone has any more questions, please use the question and answer box. I think I'm out of all my questions now, so if there's any more, then we'll answer a couple more, and if not, we can sign off for the day. So put them through. This is your final chance to ask any questions. Dun, 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 dun.
The suspense.
Yeah, I know. Well, I think you probably just answered everybody's questions there then, Steve, but
yeah.
Have you got anything else you'd like to add before we sign off?
I think hopefully it was the poll at the start which had so much concern over the bridging. Hopefully there's a little bit more confidence in actually using a bridging lender, not necessarily ourselves, but bridging lenders out there. There are others, many and varied, and actually, you know, we are in a crisis. There's no getting away from that. The economy is not what we want it to be, but there's plenty of funds out there and plenty of funds still happening. We're still doing more business than we did last year, and I think that's very important in this day and age to know.
Yeah, no, absolutely. Right, so just to confirm, your confirmation email will be sent over the next couple of days, and these can be used for your CPD. Do join us on Monday at 10 a.m. For our next criteria clinic discussing semi-commercial. We have FinSec together, Hampshire Trust Bank and Stafford Railway Building Society. I'll just put in the chat as well where these events are so you can join us for next time. But I think that's all from me. So thank you very much, everybody, for joining us today for the Knowledge Bank Lender Spotlight with Roma Finance. And thank you very, very much, Steve, for a brilliant session this morning. And we look forward to seeing you very, very soon.
Thanks, Laura. Thanks for all your help. Have a good day.
Thanks, everybody.
Take care now. Bye-bye.